So we got our consumer price numbers. So this is retail inflation. And well, um, at first, and it caused a little bit of an uptick in the market. When you look at the high end numbers, I don't know if you remember from a couple weeks ago, we talked about if we see zero point 0.2, we're happy. If we see anything higher, we get a little bit nervous. So the consumer price index month over month, well, it was 0.2%. But when you look at pulling out the more volatile food and energy, right? So we know that food prices have been moderating a little bit and fuel prices have been coming down a little bit on the oil barrel. It doesn't seem to have trickled through to the pumps yet. Time will tell, but a couple weeks ago, OPEC went ahead and opened up more production. Uh, you know, Bringing more oil on the market. So when you take out food and energy, that number starts to creep up. And some people noticed that, but a lot of people blew it off, right? But now the next thing that happened was on Thursday. So yesterday, when we take a look at the producers price index. So now we're talking about wholesale inflation. Remember, there's this whole supply chain, right? And so the retail is the last bit of inflation. That's where, the store sells it to you. But throughout that whole piece, there's inflation, whether it's manufacturing something and buying the parts from somebody else and all of that good stuff. So when you start to look at the producers price index, well, these numbers are really creeping up. Look, zero point 0.9. Remember, our threshold is zero point 0.2. When you factor out food and energy, it's still zero point 0.9. But then you factor out trade services, interestingly enough, it goes down, but it's still pretty high at zero point 0.6. And then you look at things like services, right? And I keep emphasizing, right? I know that there's a lot of focus here in the US on things like manufacturing of goods. But in the US economy of 2025, the manufacturing of goods is such a small percentage of the US economy. Most of the US economy at this point is services. And when you see a 1.1% month over month number, I mean, that kind of gets people's blood boiling. And so that started to moderate the market yesterday. And then, of course, today, well, we had our retail sales numbers. I'm always interested in again, it's a very much consumer-based, services-based economy. So I'm always interested in the consumer and how well they're buying. And well, last month it was pretty good. It actually got revised higher, but this month we're starting to creep down. And when you factor out car sales, you know, retail sales is starting to almost stagnate. So I'm getting a little bit scared in that front. And also on the industrial production front, well, flat, right? Very little change in the amount that we're actually producing here. So, what is that big picture? I've given you all this data. What does it actually mean? It means that inflation does seem to be creeping up. And we saw with the employment numbers, although, some people are questioning those employment numbers, but we saw that employment markets are getting a little bit, you know, loose. This is not a good picture for the long term.